Hi everyone, we are from Group 11 and I'm Edmund. This is my group member Ong Lik Heng, Sharon Tai, Ng Ying Xuan, Oh Kai Sian and Pavitran. So the two companies that we choose is CJ Century and Tiongna Logistics. So initially I'll talk about the business nature of CJ Century. The headquarters of CJ Century was in Korea and the subsidiary of CJ Logistics was in America, India and Malaysia. So for the core service, CJ Century have integrated logistics, freight forwarding and e-commerce delivery. And they focus on digitalization and supply chain integration. CJ Century was strong in last mile delivery and e-commerce fulfillment. CJ Century expanding regionally to Singapore, Thailand, etc. And the key clients are from FMCG, electronic, pharma, and e-commerce platform. So next, I'll talk about the business issue of the Tiongna Logistics. Tiongna Logistics asset-heavy logistics company with own fleet and warehouse. Their services included land transport by FTL or LTL, cold chain, warehousing, and cross-border. And Tiongna Logistics also involved in logistic property development, and they have over 100 logistics centers across Malaysia. The regional presence in Singapore, Thailand, and Vietnam, and the key clients are from electronic, pharma, FMCG, retail, and government.
Good morning everyone, my name is Oh Kai Sian, my number is 8248298. Today I will be presenting the horizontal analysis of CJ Century Logistics Holdings Berhad from 2022 to 2024. Let's start with our liquidity ratio. Our current ratio decreased from 1.56 in 2022 to 1.44 in 2024. Similarly, the quick ratio dropped from 1.37 to 1.28. This indicates the tighter margin for meeting short-term obligations. Crucially, our average collection period slowed down, reaching from 49 days to 53 days over the 3 years. This means we are taking longer to collect cash from our customers. Moving to leverage ratio, our debt ratio remains stable at 0.4. However, the time interest earned ratio saw a sharp decline from 12.88 to 4.18, showing a reduced capacity to cover interest costs. Now let's look at asset management efficiency. Accounts receivable turnover has soared slightly from 7.42 to 6.95 times. Inventory turnover saw high activity in 2023 at 25.96 but dropped to 17.99 in 2024. Total asset turnover decreased from 1.21 in 2022 to 0.94 in 2024, and fixed asset turnover also saw a reduction from 2.57 to 2.03 over the same period. Finally, looking at profitability ratio, while our gross profit margin held relatively steady, peaking at 15.61% before ending at 14.7% in 2024, our other margins have struggled. The operating profit margin declined significantly from 11.37% to 4.67%. Our net profit margin turned negative, falling from 3.03% to negative 1.1%. Operating return on assets dropped from 13.77% to 4.39%. Consequently, our return of equity dropped to negative 1.72%.
Hi, my name is Ng Ying Xuan and my mentoring number is 82483. I am going to talk about horizontal analysis Tiongna Logistics Holdings Berhad. First is liquidity ratio from 2022 until 2024. Current ratio from 0.96 decreased to 0.6. Quick ratio from 0.68 decreased to 0.42. The second one is average collection period by days from 2022 until 2024. Average collection ratio from 135 decreased to 114. The third one is leverage ratio from 2022 until 2024. Debt ratio from 0.62 increased to 0.68. Time interest from 0.68 increased to 1.12. And the fourth one, asset management efficiency ratio from 2022 until 2024. Account receivable turnover 2.71 increased to 3.19. Inventory turnover 4.54 increased to 5.57. Total asset turnover from 0.33 decreased to 0.25. Fixed asset turnover from 0.85 decreased to 0.66. And the last one is profitability ratio from 2022 until 2024. Gross profit margin from 17.22 decreased to 14.76. Operating profit margin from 3.84 increased to 9.69. Net profit margin from 0.91 increased to 7.61. Operating return on asset from 1.26 increased to 2.45. Return on equity from 0.79 increased to 6.02.
Hi everyone, I'm Sharon. Let's talk about the vertical analysis 2032. First, liquidity ratio. Ratio of CJ Century protects a better liquidity, showing that it is in a better position to raise money to meet a short-term obligation. Second, average collection period. We can see that Tiongna take 135 days to collect its receivable, indicating show collection and potential pressure on cash flow. In contrast, CJ Century demonstrates efficiency in its average collection period, managing to collect receivable within just 49 days. Third is leverage ratio. CJ Century has a lower debt ratio of 0.42, indicate rates relies on debt compared to Tiongna 0.62. CJ Century time interest earned is 12.88, showing excellent ability to pay interest, where Tiongna is only 0.68. CJ Century low debt and high E reflects stronger financial health and lower risk. Next is asset management efficiency ratio. We can see that CJ Century is better than Gyeongnam. CJ Century receivable turnover is 7.42, showing quicker cash collection. And CJ Century inventory turnover is 21.23, far above than Gyeongnam. CJ Century total asset is 1.21 and fixed assets is 2.57, compared to Gyeongnam is 0.33 and 0.85. Last, profitability ratio. CJ Century's superior operating and net margin reflect better cost efficiency than Gyeongnam. CJ Century also have a higher ROA and ROE. It can show more effective use for assets and equity than Gyeongnam. CJ Century outperformed Gyeongnam, led to better cost control, more efficient asset use, and stronger return on equity. Let's see the vertical analysis 2023. First, liquidity ratio. CJ Century likely maintain a longer buffer of liquid assets such as cash or receivable, while Gyeongnam lower ratio suggests heavier reliance on inventory or potential cash flow contracts. This position CJ Century is better equipped to handle short-term financial needs. Average collection period. CJ Century efficiency likely shrink for stricter credit policy and effective collection process, enabling fast cash turnover. Gyeongnam longer period may reflect credit terms or challenge in collecting payment, potentially tie up capital and increasing liquidity pressure. This highlights CJ Century superior receivable management. Leverage ratio. As we can see that debt ratio of CJ Century is lower than Gyeongnam. Time interest earned is higher than Gyeongnam. CJ Century has a focus on financial stability, retail earns or equity financing, but Gyeongnam has to aggressive borrowing to fund operation and investment, increasing vulnerability to interest rate hike and profit denies. Asset management efficiency ratio. CJ Century higher turnover likely result from streaming operation such as optimizing supply chains or efficiency sales strategy. Gyeongnam lower ratio suggests utilizing asset possibility due to asset inventory, outbound equipment, or efficiency process. Last, profitability ratio. Gyeongnam higher gross and net margin may swing for cost efficiency and higher pitching, but CJ Century stronger operating margin and asset returns suggest better spend management and asset utilization. CJ Century lower net margin could reflect higher tax or interest costs.
Hi everyone, my name is Ong Likan and my matching number is 8248346. So today I will be presenting the vertical analysis 2024. So the first one is liquidity ratio. Both current ratio and quick ratio of CJ Century are way better than Gyeongnam's ratio because CJ Century ratio is more than 1. Current ratio 1.44 times and quick ratio 1.28 times. Because CJ Century has more current assets, especially cash and receivables, relative to its short-term liabilities. The next one is average collection period. CJ Century can collect receivables within 53 days. That is better than Gyeongnam's, which is 86 days. This is because CJ Century converts receivables into cash faster, enhancing liquidity, so the liquidity ratio is better. The third one is leverage ratio. CJ Century has a lower debt ratio 0.40 times and a higher times of interest earned, which is 4.18 times. CJ Century provides greater financial stability, lower risk, and better ability to cover interest payments compared to Gyeongnam. Next is asset management efficiency ratio. CJ Century all asset management efficiency ratio is better than Gyeongnam, which is account receivable turnover 6.93 times, inventory turnover 70.99 times, total asset turnover 0.94 times, and fixed asset turnover is 2.03 times. This is because CJ Century collects receivables faster, turns over inventory more efficiently, and utilizes both total and fixed assets more effectively to generate sales. Last one is profitability ratio. Overall, Gyeongnam achieved higher operating and net profit margins than CJ Century, which is gross profit margin 14.76%, operating profit margin 9.69%, net profit margin 7.61%, return on equity 6.02%, asset operating return on asset 4.39%. Because Gyeongnam demonstrating stronger cost control and overall profitability despite similar gross margins, so CJ Century has a negative value of net margin show its non-operating costs such as interest or taxes.
Hello everyone, I'm Pamitana Salamanan. My metric number is A24B2961. Today I'll be talking about the recommendation part. CJ Century Logistics Holding Berhad. Improve liquidity through better inventory and receivable control. CJ Century should improve liquidity by controlling inventory levels and strengthening receivable collection to maintain healthy cash flow. Second, reduce operating costs and diversify income streams. The company should reduce operating costs and diversify income streams, particularly into higher margin and digital logistics services. Third, reduce reliance on high interest debt. CJ Century should reduce reliance on high interest debt to protect profitability despite its currently moderate leverage level. Fourth, dispose of unproductive assets and reinvest strategically. The company should sell unproductive assets and reinvest it in higher growth and technologically driven logistics segments to improve efficiency. Tiongnom Logistics Holding Berhad. First, improve working capital management. Tiongnom should improve its working capital by reducing short-term debt and strengthening cash and receivable management to address its weak liquidity position. Second, streamline expenses and focus on higher margin services. The company should streamline operating expenses and focus on higher margin logistics and services to sustain profitability growth. Third, gradually reduce debt level. Tiongnom should gradually reduce or refinance its debt to lower financial risk arising from high leverage and weak interest coverage. Fourth, enhance asset productivity. The company should review its asset base and invest in technology to improve asset utilization and operational efficiency. Thank you.
Finally, source of fund for expansion. CJ Century Logistics Holding Berhad recommend funding retained earnings. Why? Because low debt ratio 0.40, which means strong equity base, low financial pressure. High TIE 12.88, decreased to 4.18, which is 2024, so it's solid interest coverage. Healthy liquidity, current ratio greater than 1.4, quick ratio greater than 1.2. Strong operational performance is net profit margin positive in 2022 till 2023, but small loss in 2024. ROE 6.33%, which is from 2022, solid asset turnover. So the benefit is maintain ownership control, avoid new debt, and shows financial prudence. Secondly, Tiongnom Logistics Holding Berhad recommend funding equity financing, issue new shares. Why not that? Is because high debt ratio rising from 0.62 to 0.68, low TIE 0.68 increasing to 1.12, which means weak interest coverage. Poor liquidity is current ratio 0.96, decreased to 0.6, quick ratio down to 0.42. So the positive signs is net profit margin improved to 7.61%, ROE rose to 6.02%, increasing investor confidence. The benefits is avoids more debt, supports long-term growth, aligns with improved performance. That's all for us. Thank you very much.